Hello and welcome. This week, Brown Wealth Management released an article on our website that was looking at what could potentially cause the beginning of the next recession. It's a question most of our clients have been asking us on a regular basis. And about 6 months ago, I had the privilege of having dinner with Bernanke. And he basically said expansions don't die of old age. They more or less get murdered. And if you look at the chart on the screen here, what you can see is that the current expansion, even 6 months ago, was the longest expansion since World War II. It can be seen on the blue bar up above. It was 127 months over 6 months ago. So this continues our expansion. As you can also see on the red line, the red box here, it's about the average growth per year has been the weakest at 2.3% per year. And he identified three things that could potentially murder our expansion. One is inflation. And inflation right now appears to be very low. Doesn't appear to be an issue in the short term. Number two is credit conditions or a lack of them. And credit conditions are flowing well in the United States. So that also doesn't appear to be an issue in the short term. And then finally is geopolitics. And that's been on front and center stage over the past, I'd say, almost 2 years plus, as the trade war with China, issues with Iran, and now you can almost throw the coronavirus and potential presidential election in there. The unfortunate thing about geopolitics is they're hard to predict. They're hard to see what can happen there. So they're the least likely item to be prepared for. So in that case, if that's our biggest risk, clients should know that they should be set up with their right asset allocation at the present time and knowing where their risk tolerance is set. This is something we've been doing with our clients on a regular basis, what we call a risk audit, and a link to that is found in our webpage. What I did want to also illustrate here was another item that was part of our article, which was saying instead of a recession, people should be more concerned about the next correction. The last time we had a 20% closing correction on the US stock market was in the great financial crisis. That was at the very beginning of this expansion. So clients have not really experienced any meaningful drawdown in the US stock market in over 10 years. I think that is the likely thing to happen before the next recession. And I think that's the thing that clients need to be prepared for. So when you get a chance, take a look at our article, read the details, and take the risk audit. It's pretty fun, a little bit gamified, and I think it'll give you a clue on how you feel about risk and how that might relate to your portfolio.